All right. Well, let's get in. Let's get a little bit more fundamental analysis going. We have Amnish Aggarwal, the Director Institutional Research at PL Capital, who joins us. Hi, Amnish. Thanks a lot for joining in. Well, the oil and gas space, plenty of news flow, right? Overnight, Trump, wrapping those who are going to take oil from Venezuela on the knuckles. And also, we have news that there could be some light at the end of the tunnel on the LPG recoveries as well. How are you viewing the oil and gas space? For starters, maybe the stock start off negative, both the producers, that's Oil India and ONGC, as well as the OMCs as well. Do you think it's a buying opportunity?
You see, the situation remains volatile because, first of all, the crude is actually, for example, fluctuating. But I think this news on Venezuela in particular, I think it is going to be negative for many OMCs which have been actually importing crude from there. So to that extent, I think there your margins can come under pressure incrementally. And what was the second part of your question?
So how do you approach them? These stocks are going to start off in the red. As you're saying, things are very, very volatile. But if you look at the OMCs, they seem to have got their mojo back. If not mistaken, the stocks are up 15 to 20% from the recent lows because of lower crude prices, valuations, and also the margins now are much better than the historical average, as well as what the street is factoring for FY26. Your take?
You see, OMCs, you can't look at, like, for example, a structural fundamental stocks because there, for example, month on month, quarter on quarter, your refining margins, marketing margins, they will continue to fluctuate. But having said that, the lower crude prices are going to benefit in the near term, and that is why there has been some rally in the OMC stocks. So in the near term, unless and until we are clear about what happens on the Venezuela front, to what extent it is going to impact, there might be some more steam left in these stocks. But it is purely, I would say, like you can say, a trading call, and very difficult to watch what is going to happen 1 or 2 quarters down the line.
Okay, all right. Amnish, what about the tech space? The IT index has been a relative underperformer. Now, various brokerages are pointing out that maybe bulk of the bad news is in the price. To give our viewers a data point, the Nifty is up mildly now in 2025 so far, while the tech index is down 15%. What's your view on tech from here on, given that we have earnings in the next 20 days or so? We'll have most of them that will report their numbers. And what's the pick of the pack?
Is a tech, actually the demand continues to be benign for all the tech companies, and the commentary also is not great. Now there are two parts to it. For example, Europe was already witnessing a slowdown, and if the current, you can say, the positioning or the current whatever news we are getting from US, I think that there could be some pressure incrementally there also. So I think if you are looking at, say, a tech space, there is not a significant improvement which is likely in the near to medium term over that space. So we expect that in tech space, you might see, say, low to mid single digit kind of a cut in earnings as we go along. And I think that is perhaps what the stocks are also reacting to it. And given the global uncertainty, the kind of, you can say, the trade wars which are on the horizon, and the kind of news flow which we are getting, I think I would be very reluctant to stick my neck out and go overweight on tech at this point of time.
Okay. All right, Amnish, got that. Thanks very much.
Amnish, thank you for waiting. Any thoughts on this issue if you've looked at it?
Yeah, which one? This oil one?
The oil imports and Trump saying that 25% tariffs on anybody buying oil from Venezuela. Any implications for Indian companies?
Yeah, you see, the main thing is that India has been increasing the imports from, you can say, Venezuela, if you look at, say, past few years. And whenever you get a cheap crude imports, then actually it reduces the overall basket price to some extent. But having said that, now the kind of, you can say, duties which have been imposed by US, that anyone who imports, they will be facing the duties, I think that advantage actually goes away. But the number is not big enough for India to worry that it is not maybe, say, double digit of our imports or something. I think it is hardly 1 or 2% of imports, which India can easily shift to other sources. But having said that, it actually might push up your overall cost a shade. That is one. And secondly, it narrows down your choice to some extent, which might have even implications not only on India, but some of the other oil importing countries. So to that extent, I think there might be minor variation here or there, not a you can say big one, unless and until we realize that there is that the bulk of imports are going to, you can say, one single player, and So that might be one issue with one player. But otherwise, I think not a big needle mover as far as India as a country is concerned.
Okay, all right. Thanks a lot, Amnish, for joining in and filling us in with all that fundamental analysis.